Yes, it is amazing. The US is right now the #3 oil producer in the world, right up there behind Russia and Saudi Arabia, and catching up fast. Well, Carl Larry is Commodities Markets Specialist at Thomson Reuters in Houston. Carl, good evening. Thanks for joining us. Did you hear Mark Schwartz there, who is one of New York's leading oil analysts? I'm sure you know him. Really getting quite excited, saying that this shale oil boom in America is one of the biggest stories in his 40-year career. I mean, do you agree with that?
To a degree, I agree. I think that it is something very big that we haven't seen ever before. But I think more to the point, something even more, really more interesting is that we're exporting more oil. So we're becoming this trade partner now. We're exporting almost 2 million barrels a day of crude out to the rest of the world. And that makes a big difference. Not only are we taking less, but we're pushing more out.
Yes, I mean, the US is not likely to ever be truly independent of these other oil-producing nations, is it? Because it'll always need a market in which to sell that oil that we're now exporting, as you were saying. And also, of course, you know, you can't ever completely cut yourself off from these other countries who are oil producers.
That's right, yes. We always were going to want to look for trade partners. There's always something to give, but something to take, but now there's something to give back. So it does create a different balance now.
Yeah. Now, does anything slow these shale oil guys down? I mean, maintenance issues, staffing issues, does that ever cause them a problem when they're ramping back up again quickly?
You know, it takes some time to get back up quickly. I mean, not a lot of time, but it does take some time. But I think the one thing that we're still overlooking here is we've never done this before. So the point that it starts to decline, we think that that could be a very high rate sooner than later. So that's something we have to be careful about. There's a lot of money invested into shale oil, onshore fracking. But if at some point we start seeing that production lower or start to drop, there's going to be a lack of production offshore that we haven't really seen a lot of investment in.
Right. Now, Carl, what about the majors like Exxon and Chevron? They had pretty big misses of Wall Street expectations with their latest quarterly earnings only last week. Is part of that that they can't move as quickly as the newer guys can?
Well, you know, I mean, it's a balancing act. Obviously, the Exxons, the Shells, the Chevrons, they do try and balance the refining with the production, whether it's onshore or offshore, and then the imports and exports. There's a lot of moving parts here. And, you know, obviously, they are lacking the revenues that they're getting from the export, but that'll pick up soon. You know, they're always a little bit, you know, behind the curve, but once they get picked up, they lead the curve.
Right. Well, for now, oil is tumbling, as we reported earlier on today. It's at its lowest at the moment in Europe since late December. Is there a bottom in sight?
You know, our research team over at Thomson Reuters are looking for about $58. We think this decline will continue, not so much from the supply side, but more from that production side you talked about earlier. That number keeps growing. I think at this pace, sometime within this year, we're going to see 10 million barrels a day from the lower 48 states, not even including Alaska, which is pretty impressive.
Okay, and just quickly, this market turmoil we're seeing, is that going to influence the oil price terribly much?
Well, I think, you know, people look to commodities, especially oil, as an inflation hedge. All this, you know, all this volatility around inflation in America, I think we're going to start seeing money being back vested in oil.
Okay, Carl, thanks very much indeed. We appreciate it. That's Carl Larry from Thomson Reuters on the line from Houston, Texas.